Hello and welcome to Martyn Lucas Investor. My name is Sensei and we are here for some CPI data ahead of the US CPI data, ahead of the FOMC meeting next week. So we are getting ready for a very volatile 7 days ahead. Plus, crypto CEOs meeting senators and the Tesla earnings today. So let's get straight into the news. And then I've got a special premiere straight after this about XRP and the $1 billion deal. So, what is the top story of today? Well, we've got CPI data that has been announced. Is it the US CPI? No, that's why I said it's the CPI data ahead of the US, but it's still very important. It's the UK CPI data. And remember, the US and UK sort of move in line. They correlate very heavily in terms of CPI data and rate cuts. Rate cut expectations in the UK have shot up after today's CPI. Let me tell you all about that. And then we'll come on to the US CPI, which is actually being released. Remember, we weren't expecting any data to come out of the US while this shutdown is going on, but things have changed. They found some funding. And they've managed to put together the CPI and they're going to release it on Friday. So you have to be tuned into the show on Friday. Why is it so important? Well, because a few days later, this time next week, in fact, we will be doing the FOMC meeting where the US will announce their rate cuts. They'll come out with information about the press conference where Jerome Powell will take the stage, give his speech, and give his tone, whether he's dovish or hawkish, and that will move the markets a lot. So I'm sure Jerome Powell has had a little peek into the UK's CPI ahead of the US CPI. So 3 major events: the UK CPI today, US CPI Friday, and the Federal Reserve meeting 28th to 29th. Remember, it's a 2-day meeting. However, we'll get all the information this time next week. So on the 29th, we'll get the press conference, we'll get the rate cuts information, and the speech. In the Q&A as well. So so all of this will decide whether the markets will keep pushing higher or pivot back into defensive mode. Are we going to keep the markets running? Well, it all sort of depends on Friday's CPI. By the time we get the CPI information on Friday, the markets will have a very good understanding what Jerome Powell is going to say in his speech, what the decision will be in regards to rate cuts. That's why Friday is going to be very important. But we can sort of peek into Friday by looking at what was released today, which is the UK's CPI. So each gauge is the same theme in a different way: how fast inflation is cooling and how long central banks will keep financial conditions tight. If inflation keeps easing, risk assets stay bid. If not, liquidity tightens. And capital rotates towards the dollar bonds defensive. That's essentially what will happen. If CPI comes down, markets will rally. That means inflation's easing, they're doing their jobs, they don't need to be so restrictive with their interest rates. If it doesn't come down and it goes up or it's against what we expect, they'll keep interest rates where they are. The money will go into dollar bonds defensive, all the boring things that not many of us really care about too much. We don't invest long term so we can be in the dollar and hold dollars in our mattress. We don't invest long term just to buy bonds and get a few percent a year. And we don't invest long term just to be in defenses. Maybe there's certain points in our investing journey where we go into these, or should be part of your portfolio in a diversified way. But it doesn't excite me when when inflation's up and I can get 3 or 4% or 5% in a bank account or in a bond. That's not very exciting, and it's not going to really keep up with inflation either. So UK CPI was announced today, and it was pretty good. So September CPI snapshot, the headline CPI rose by 3.8%. Yes, it's still high, but it's coming down. It's actually lower than we expected. So that's unchanged from August, while core CPI eased to 3.5% from 3.6%. So it is coming down. The broader CPIH, including housing cost, actually was held at 4.1% on a monthly basis. Both CPI and CPIH were flat at 0%, matching the pace seen in September of 2024. If you haven't hit the like button yet, please do hit the like button. Please do subscribe and hit that notification bell as well, because we'll have a lot to cover over the coming days. What were the drivers? Well, transport made the largest upwards contribution to the annual rate, reflecting higher fuel and air fair costs, while recreational and culture and food and non-alcoholic beverages provided the main downward offsets. Within CPIH, core inflation slipped to 3.9% from 4%. Goods inflation ticked up to 2.9% from 2.8%, and services inflation remained at 4.9%, underscoring sticky domestic price pressures. So, why do the traders care? The UK print often leads the US trend by several weeks due to faster energy and import cost transmission. So, it's giving us an indication on to remember, no, the world doesn't care about UK inflation. The UK obviously does. The people that live in the UK, such as myself, obviously care about inflation. Food costs have been, I think, UK had one of the worst inflation rates over the last few years in sort of the Western world. And it does affect the people. However, the global markets are dominated by the US. So I'm not covering this news because I think it's going to be very important for the markets just by itself. But the fact that the US inflation normally goes by the UK inflation, or the UK inflation is slightly ahead of the US inflation because of how quickly the import cost and transmissions through the system, as a smaller country, etc., it gives us an indication of what's coming on for Friday. So if we we're going to go off that, it does look like we might get better CPI than expected on Friday. So a steady 3.8% print confirms global disinflation remains intact, giving equities and crypto an early tailwind. So yeah, if we keep bringing inflation down and we're not ticking up, the worst thing is holding steady is fine, coming down is great, going up and any indication that inflation's on the rise again, that's what will send the market tumbling. And we got no indication of that. It's slightly good. Most of it held. Some parts of inflation actually came down. It wasn't amazing. Nothing came down. A few basis points. It was very much steady / slightly down, which is great. The only thing we don't want to see is going up. A surprise uptick would have reignited sticky inflation fears, pushing gilts and treasury yields higher and risk appetite lower. We didn't get an uptick. That's what the market was waiting for. CPI was steady. The risk on is risk on bias, so that it looks like we're going to continue being risk on. What does risk on mean? Well, people invest their money into more risky assets such as the stock market, AI, crypto, rather than flocking to defensive stocks. The FTSE futures remained firmed. Nasdaq and Bitcoin often follow overnight, so we'll see if Bitcoin and the Nasdaq will be up today. See if CPI was hot, which it wasn't. We'll go risk off. Traders will go towards a bit more defensive ahead of the US CPI, and equities will come down, crypto would come down. But now moving towards the big event, I think this is sort of maybe a little bit more important than the FOMC meeting. This inflation report, the US CPI, which we are going to get on Friday, which we weren't expecting, might be a little bit more important than the actual FOMC meeting next week. If you have just tuned in, please do hit the like button. Please do subscribe. If you want all of this information, it is in our very own newsletter. The link is the first link in the description. It's also in the live chat. The Bureau of Labor Statistics will release CPI September CPI despite the US government shutdown. With other data sets frozen, this print becomes the single macro signal driving all positions before the Fed meeting. Why does it matter? CPI decides whether risk on or off, full stop. That's it. That's what the CPI will tell us, whether we're risk on or risk off. If inflation slows again, the soft landing approach and the Fed patient narrative holds, supporting equities, crypto, and high beta names. If CPI reaccelerates, if we get an uptick in inflation, rate cut hopes fade, traders unwind, risk in tech, small caps, and altcoins. The market scenarios: if it's risk on, CPI cools, Fed can stay on hold, S&P, Nasdaq, Bitcoin extend gains, altcoins rebound, and liquidity confidence returns. If we're risk off because CPI is higher, we'll be looking at the higher for longer narrative. The US dollar strengthens, equities and crypto start selling off, and the leverage can unwind once again. With the US shutdown halting census and commerce data, CPI remains the lone mission critical release. concentrating macro risk into a single number. This will be the most important CPI inflation report since the COVID era. Why? Well, because we've got no other data. This is the only time we've only got one data in the last, I don't know, 4, 5, or maybe ever. The first time we've only got one data source for the Federal Reserve to go to, and also it comes at a time where the Federal Reserve was looking to cut rates and have come back after a whole year of not cutting, have started to cut rates, and we're expecting rate cuts. A very, very, very important release. Let me go back here. So, where were we? Where were we? Yeah, and then we've got the FOMC next week, which is obviously what this is all about. So the FOMC meeting is this time next week. Make sure you tune in. The FOMC meets with the federal funds rate of 4% to 4.25% after the September's first cut of 2025. Markets expect another 25 basis point cut. That's what the markets expect right now. They expect it to the tune of 96%. We are very, very likely to get a rate cut. And that's what makes Friday even more important. CPI data on Friday is even more important because the market right now expects a rate cut. They're 96% confident. The market's priced in a rate cut next week to the tune of 97% confidence. They're very, very, very confident that the market, that we're going to get a rate cut. And when you're so confident that the market's going to get a rate cut, and then a bit of data, and the only piece of data that comes out is a massive surprise and it might be up, that's when the market can crash, because it's so overly confident that we'll get a rate cut. And I think we will get a rate cut. However, if the inflation data on Friday is really bad and it's actually an uptick, that's when the markets could come crashing down. That's why I never like trading these days, unless, look, there's one risky way you can trade these events, and again, it's not financial advice. It's if you've got a leverage position on standby waiting for the information to come out, and 9 times out of 10 you don't press the button, but when something horrific happens or something amazing happens, you press that button, whether it's a short or a long. If for example, CPI on Friday, you get a outrageous figure towards the upside, that's the point where if I had my phone open, that's the 1 out of 10 times I'd go, okay, I'm going to short the market for a very quick trade because there's going to be a leverage unwind, and this was a very surprising bit of data, and the market's going to crash. Or the other way, CPI comes in at 2%, 3%, and the market goes rallying. That's the only times and the only way I would trade these. But long-term trading these or swing trading these, or most of the time, you're going to get wrecked because it's a volatile period in the market, and you don't really want to be trading data releases. But yeah, it can be very volatile because of the fact that everyone is very confident we're going to get a rate cut. So the FOMC, yep, that's this time next week. Why does it matter? After a year of light policy, the Fed September cut marked the pivot to easing. We've only recently started easing again. A second cut would confirm that shift. Moving debate from how high to how fast. Governor Christopher Waller has publicly backed a 25 basis point move, citing clear labour market softening. We've listened to Fed Waller a few times this week. He's constantly saying rate cut, rate cut. He's also saying the neutral rate is about 125 to 100 basis points below where we are, so that is about 4 or 5 rate cuts. So here's the playbook. If CPI is soft on Friday, we expect a 25 basis point cut. We expect if there is a balanced Powell, that means risk on. That means the soft landing momentum heats up, and the rally extends. AI and crypto can keep this rally going, and we can go into really overextended territories. However, if CPI is hot on Friday, we can still get a 25 basis point cut from Powell. I think no matter what, unless we get a massive upswing, we're going to get a rate cut from Powell. But if CPI is hot, we can still get that 25 basis point rate cut, which everyone will be like, great, we're getting a rate cut. What's wrong with that? Well, it's what Powell says, because he'll probably be a bit more risk off. Why? Because he'll start being hawkish. He'll start saying inflation's ticking back up. We might not cut rates anymore. The economy is fine. And that way you can still get a sell-off with a rate cut. So don't think rate cut equals the market goes up. You need to know what's going on behind the scenes. It's not as simple as hearing a rate cut and that means you should buy crypto. It's not as easy as that. Or the worst case scenario, CPI is very hot. We actually end up getting no cut, which the market's not expecting. That will be full risk off mode. That will be 10, 15% crashes across the stock market, 30, 40, 50% crashes in the crypto market. Obviously, the dollar will go up, Bitcoin, Ethereum, and growth equities will fall off a cliff if that happens. So Powell's tone will set November's mood, deciding whether traders keep buying dips or rotate into defensives to close the year. That's why it's going to be so important over the next sort of 7 days, because on Friday, US CPI, today we've got the UK CPI, this time next week, FOMC meeting. It's lovely to have Martyn in the chat. He says, "Morning, all my dear Lucasades, miss you all." We all miss Martyn a lot. Lovely to have you in the chat, Martyn. So, why am I talking about UK inflation today, and why am I making why am I titling the video that? Why is that the most important thing? Well, because the UK and the US CPI move together, both driven by energy and services costs. That's why traders treat the UK release as an early signal. The UK is very much a service-based economy. The US is moving towards, well, it has been over the last sort of 10, 15 years, very much moving the same way into a service economy. Now they're bringing manufacturing back, and we'll see what happens with that. But very much there's the same sort of makeup. And they go hand in hand. If you put the UK inflation on a chart next to the US inflation, they move together. So today we got a soft and stable UK CPI print. So the markets are leaning towards the US to follow the same. Of course, it's not as easy as saying the UK went down, the US is also going to go down. If you look long term, it's the same. Day-to-day prints can be a little bit different, but it is a good sign that UK inflation today wasn't an uptick, and it looks like the peak was in for UK inflation. And what I mean by the peak is not the peak in 2022. We were going into an uptrend, and we're coming back down. If you look at the inflation graph, I don't know if I can bring one in. Inflation. US inflation rate. Yeah, let's have a look at this. Yeah, and then if I can put the UK one on top, UK inflation. I don't think I can put the UK inflation in. CPI. Yeah, I can't bring in the chart. Hopefully, I'll bring it to you when we look at the inflation on Friday. But either way, yeah, it looks like we are trending back down on the UK inflation. So that should mean that we are on the US inflation as well. So the bottom line is, if inflation cools, equities will climb, crypto regains momentum, and the soft landing story strengthens. If inflation reheats, the dollar firms, liquidity tightens, and the risk assets retreat. The sequence is, we got the UK CPI today. It's leaning towards a positive CPI release on Friday, which is leaning towards a dovish Fed next week with a rate cut. So that's the way I think it's going to go. Obviously, it all depends on this middle part here with the US CPI on Friday. But if I had to make a guess, today's CPI wasn't amazing, but it was good. No uptick. That means on Friday, if we're going off that, which we just can't guess, but it gives us an indication that Friday will probably be the same, which would be slightly lower, better than what analysts expect, or the same as what analysts expect. Inflation is not having a big uptick, meaning when we come into the FOMC meeting next week, we go towards definitely get a rate cut. I'm sort of 99% sure we're going to get a rate cut no matter what. And then also actually a dovish Fed, meaning Jerome Powell in his remarks will be talking about more rate cuts and how the labour market's more important and how inflation is ticking down. So we could be leading into a euphoric run in the markets to then come crashing down in a recession if we do get that. But yeah, the markets are very overbought, but I do think that we can get that one last euphoric run. That's the way I'm tilting. Maybe, again, I used to be 60-40% that I'm tilting that way, then I moved to 50-50. I'm still 50-50, but for me, it's worth being in the market, because if we do get that big move towards the upside, even if a crash comes, it might just be another buying opportunity, and it might not crash too much below where we are today. So yeah, that's my thoughts anyway. Again, Friday, tune in with us. We'll have the US CPI next week. We'll have the FOMC. Quite a lot of, and also don't forget the earnings has actually been quite good so far. It's sort of really strong earnings season so far, and we're covering earnings. 85% so far of the S&P 500 companies, so roughly 85% of the S&P 500 companies that have reported so far this quarter have beaten earnings estimates. So we might be growing into that valuation of that overvaluation of the S&P 500, but 85% of the S&P 500 that have reported so far, and we haven't had all the reports yet. We haven't actually had most of them yet, but so far, 85% of them have beat on profit. So it could continue. Let me go to your comments as well. Let me just also set up the next event, which will be going over to a XRP event. So let me do this. I'm going to schedule a premiere. Leave your comments as well. I'll come back to them in a second. Schedule a premiere. So we're going to go over to a XRP video that we recorded yesterday, but if you haven't seen it, you definitely want to watch it. I'll put it at 1:15, set as premiere. There we go. That is perfect. Okay, let me go to your comments, answer some questions, and then go into some other top stories of the day. If you have just tuned in, please do hit the like button. Songs for Space says gold could fall. I was just seeing a comment from Martin. I want to cover that. Yep, I'm prepared and have been for weeks for a major crash. I've reported this repeatedly on my socials and YouTube. I'm backing it with my own money. I'm fully out of the market and in T-bills. Yes. Netflix is a telling sign, but most importantly, we are 30 times earnings, one of the highest in history of the S&P 500. The biggest test for investors is patience. Sat on the sidelines waiting. My money has been sat in T-bills, earning 4.5%, about $45 a day. Yes. Look, it's everyone do what you think is right. For most people, in all honesty, is put your money in a diversified portfolio. Maybe if you want to be a bit more risky, put it into more in the US because that has better returns, and just forget about it. Just buy whenever you can. If you see a big dip, try and buy some more, and just forget about it. Don't think about selling and buying back the crash. For the people that want to actively invest and manage their portfolios, then you need to know there is a warning sign. The markets are overheated. The markets are ahead of where they normally are. If you look at the earnings, we are approaching .com era levels of what's it called? Levels of risk and euphoria. Does that mean we have to crash tomorrow? No, it can mean that we go on another run. Everything gets overvalued, and then we come crashing down even harder and faster. So yes, the markets are overvalued. History shows we go from overvalued to undervalued in market cycles. Right now, we are towards that overvalued area of the market cycle. So be prepared for a crash, but that doesn't mean you have to sell out the markets. It doesn't mean you have to follow what Martin's doing. It doesn't mean you have to follow what I'm doing. You have to do what's right for you. It could just mean staying in and not caring about selling and buying. It might not be right for you. But if you're an active investor, you need to understand the numbers don't lie. And the numbers right now are suggesting the markets are overheated. So we might get great CPI, great Fed next week. We might get another rally, but that doesn't mean we're just going to go up forever. Nothing goes up in a straight line forever. Did we get UK inflation? Yes, we did. It was good. Netflix yesterday. Vaz covered the earnings. Essentially, they had to pay a fine in Argentina, Mexico, somewhere. They had to pay a fine. Their earnings was actually good. Their earnings, if you take away that thing that no one expected, which is this one-time fine, they had to pay one-time fine. They had to pay. Yeah, some people are saying it's good, but you can see Netflix is tumbling. Any reason for them for this? So just because, and Martin's completely right. If I show you this, just because their earnings, the underlying earnings was good. Why is Netflix down? Well, because the market is looking for any excuse to sell off. The market is looking for any excuse to sell off. We saw that a couple Fridays ago with what even set it off, 100% tariffs. We've had tariff information all the time, but the market was so overheated, any information, 100% tariff, news potentially of the 1st of November, the markets came crashing down. Crypto came 80% down. Now, with Netflix, with some earnings, the earnings was actually really good, but they had to pay a fine. And that fine doesn't mean anything for next earnings, the earnings after that. But it's down 7%. Why? Because the market's looking for any reason to sell off, because we're priced for perfection at this point. The earnings so far, 85% of the S&P 500 S&P 500 companies have beaten earnings. But that has to be the case. If it was 50% or 40%, the market would already be crashing. We need to be priced for perfection. So everything needs to go right. CPI needs to be perfect on Friday. We have to have a rate cut next week. If we don't have a rate cut, the market will tumble. If inflation, if CPI really has a big uptick, the markets will tumble. If inflation is good, the markets might rally a little bit, but they're not going to go ballistic. But if everything goes badly, that's when the markets will crash. So the markets really are priced for perfection, and you need to understand that. Let me go back to your comments. Martin says, remember, we have two jobs: to make money, but most importantly, to protect money. Yes, there you go. I mean, what's the point of making money if you can't protect it? 100% right. And Martin says, I was spot on with Coca-Cola. I'm 100% certain a better time to invest will come. Yes, did everyone see Coca-Cola yesterday? I mean, absolutely spot on. And I was thanking Martin yesterday because he brought it to us. And then we looked at the technicals, and the technicals were amazing. I was, I think I was also, I showed it on the show, and also privately with Martin when we were discussing it behind the scenes. I was consulting with Martin about Coca-Cola, and I said, yeah, the chart's looking great as well. Even with if you have a large amount of money, you don't need to wait for it to go up 100%, 20%, 30%. And we'll look at the technical chart. And I said the chart is showing, and I said this live on the show as well, the chart is bottoming out at 66 and a half cents. And this is looking very, 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 very likely to go to at least $69 and then hit this trend line at $70. Now at $71. And I said, even if it was going to continue a downtrend, you can still make money on Coca-Cola. But now it looks like it's not going to continue a downtrend and it's going into an uptrend. But yeah, I mean, it's an incredible trade on something so safe as Coca-Cola, up 7-8%. Martin said it's going to beat on earnings. It beat on earnings. So congratulations to anyone who is in Coca-Cola. I mean, imagine Martin saved himself 80% on XRP because it dropped to $1.80, or some people might say 60% because you can only buy it $1.50. Anyway, saved themselves probably 50, 60, $80,000 and went into Coca-Cola. So congratulations to Martin. Read my other post thanking you. What did Martin? Sensei is giving great information. I agree with all of that. Thank you, Martin. Yeah, thank you very much. Have you thought about Texas Instruments dropped 8%? Okay, let me go and go through your comments. We've got a event starting very soon, so I'm going to give you the link for that. Next. That's where we're going in about 10 minutes, 7 minutes time. That's the next event. So UK CPI, yes. CPI, UK CPI lower than expected. Yes, it was, which is still higher than what it needed, that wanted and needed. Yeah, it's still high. I mean, it's not to 2%, but it's falling, which is what everyone wants to see. An excuse to extract more tax. We're booming. Economy grew by a margin of 0.1%. Bring out your stale bread and tap water in celebration. Yeah, we do have another tax rise coming, don't we? When is that? November. Rachel Reeves will probably cover it live. Ninja Cowboy, Jerry, Human Being. Oh, we're here. Brian Bynum is here. Stephen is here. Moon is here. Ricardo's here. Nada's here. Ricardo, you were supposed to be first, but you weren't, were you? Yolando's here. David Hensley says, what's up? Hello, David Hensley. Yolando's here, says, hit the like button. Yes. HB4L, XRP chart not looking the greatest this morning. Maybe we'll get lucky today. Maybe we will. I've got an XRP video. I mean, look, at this point, I don't even care about the XRP chart. It's all the good information that's underlying. Where if it goes down, I'll just buy it. I'm not even interested in day trading XRP at this point. I'm just interested if it crashes, I want to buy more. If it goes up, I've got certain levels I want to sell. If it goes sideways, hopefully I can accumulate. Right now, we are just in the point of the market where we need to see, are we going to continue with the last bit of euphoria? Are we going to get that altcoin season? We'll find out on Friday with the CPI information. Or are we going into bear market? Until then, the market hasn't really decided which way to go. $2.30 is the main level of support if you're looking at a chart. Songs for Space says, hello, Dale is here. Songs for Space says, stale bread and tap water sounds like a bar in England. David Hensley, thank you very much. Ryan Eskin says, hi everyone, XRP song please, I might pump at 3%. Ricardo says, Sensei, would you do another quick chart on BYND? Please and thank you, mate. If we have time, we will. What's with the black eye? Do I have a black eye? No, I get dry skin around my eyes, and sometimes it shows up on the camera a bit differently. No black eye, don't worry. Gold down 6%. Yeah, we did expect that. We told you that can easily happen. I showed you the chart yesterday. I said it will come down and then it can go sideways, but the initial move down finds a base and then accumulates sideways until the next move up. That's what I'm expecting. I approve this message, says T-Tain. Chris Sheldon says gold tank is a great sign of rotation to Bitcoin and equities. Well, we're not really seeing that rotation, are we? Super Cobra says Martin had a good time paying his margin off in time, almost like he knew. Yeah, I mean, he literally told you all exactly what he thought was going to happen. Only 63 likes with all these people watching. I know, Mike Turner, what's going on? Everyone's a bit lazy in the morning, so they don't like to hit the like button. Market's pattering out. Yeah, it's just going to be a waiting game until Friday. We've got Tesla earnings. If anyone wants to request Tesla earnings, you can do a $10 super chat. Someone must want to do Tesla earnings. You can do a $10 super chat. You're going to run out of time because we're going to go over to our premiere in a few minutes' time. So if you want us to cover Tesla earnings tonight, you can do a $10 super chat. And we will cover it for you. Gold could fall and go into a very long, very bear market. What is gold could fall and go into a very long bear market, sideways market. What it does, because could bounce, of course, going to short again if it bounces. Yeah, it can, but look, we go into big swings. The cycles for gold are very long. We expect to be in another up 2026 to also be an up year for gold, and then we can look into bear market. I mean, gold can go to $5,000, $10,000 an ounce before it goes into one of those long bear markets. Did you know the dump was coming, Martin? Yeah, Martin did know. I mean, he literally talked about it. What about the carry trade, Sensei? No news on that yet. Again, I've said it's not the most likely thing to happen, but we'll keep an eye on it. I don't think we've got any news on that yet. Songs for Space says, looks like kind of actions market before a sell-off. What if he says 50 points while the markets will rally, but I don't think he will. Pre-market looks bad. Can no longer match UK with US with the green stuff. I saw the banks are having credit problems, possibly trillions of assets are selling. No, that is we covered that. That's not the case. That was just a couple fraud cases, and again, the market looked for any reason to crash, and they crashed, and then they came back much higher than they were the day before. The market's looking for any reason to crash, and that wasn't the reason because there was no follow through with that. Thanks, Martin Sensei. No worries. Hold some cash. What's the news? I see nothing on my FX street. The news was UK CPI is down. Sensei giving us great information. I agree with all of that. Thank you, Martin. Remember, we have two jobs to make money, but more importantly, protect it. I was spot on with Coca-Cola. Yes, he was. Read my post. Thank you, Martin. Wadey says, have you thought about Texas Instruments? No, Wadey, I've not looked at it yet. Cedar Tree says the fourth quarter tends to be even more bullish when the S&P 500 year-to-date gains through the first 3 quarters. Yeah, we'll see how we end the year. It really all depends on Friday's CPI. Sold 50% of my Coca-Cola. Congratulations, in Broomwolf. I would have probably sold both Coca-Cola as well at this point. Just wondering what's next for Bitcoin. No one will know. I'm still in Coca-Cola average entry of $66. Congratulations. Nothing to back this up. Just a gut feeling. I think next month is going to be our month for crypto. Yes, I hope so. Do we get data? We did. UK inflation was better than expected. The next one will be Friday. Tax rises will push inflation down. No one wants to spend. Okay, brilliant. What we're going to do now is go over to our premiere, the $1 billion XRP treasury that just made history. Evernorth's XRPN goes public. So this is starting now. Please, everyone, join me on this. This video will automatically take you there. It is the link that's pinned in the live chat. I will spam it in the chat now. You can go click on it now because that's about to start. That's where we're going next. We'll be live later, maybe with the Tesla earnings. If anyone does a super chat here or does a super chat in that premiere, remember there is more earnings coming up, so you can always do a $10 super chat for any earnings, and we can do the earnings for you. I think we've already got one booked for tonight, so we can also do Tesla if anyone likes. You can tell that I want to do Tesla, can't you? It'll be a good one to cover. We might just do it anyway. Let me save this. Okay. Yeah, so that's where we're going over to next. We might have, so keep an eye out on the channel, we might have this event coming up as well. There's no way to see if it's being streamed yet. If it is being streamed, I'll cover it. It looks like Coinbase CEOs, Ripple, Stuart Aldergrady, they're all meeting with a senator at a roundtable. We don't know if it's going to be live streamed yet, but hopefully it will be, and it'll be later on this channel. But now we're going over to the live premiere with Brad Garlinghouse. I think it should be starting now. Yeah, perfect. Thank you everyone for tuning in. Go and check out that premiere. The link is in the live chat. This video, if you stay where you are, will automatically take you there. But until next time, take care of yourselves and each other. Bye-bye.